Hi, this is Roger Conrad. I'm editor of Utility Forecaster. What I want to talk about today are earnings expectations in the election. Three very important factors that will shape how these utility stocks that we own perform going forward. And when I say utilities, I mean essential services. Those of you who are longtime subscribers know that we include electric companies, gas companies, water, and communications in that group, as well as some of the pipelines as well. So all these companies, what they have in common, they produce and provide services that are in demand no matter what the economic situation, and that gives them a layer of financial strength, financial security, dividend security that other industries simply do not share. So these things tend to do very, very well as businesses when the economy is weak as it is now. You know, paradoxically, what we've seen with the share prices of these things, though, since the end of 2007, has been basically a lagging of the market, and these stocks have responded very much in tune with economic developments rather than interest rates. So even while the 10-year Treasury rate has dropped in half, which had been a benchmark rate, it's dropped in half since the middle of 2008, you still see utility averages down 20 to 25% from the highs of that time. So you've had basically a decoupling from interest rates, a very close linking with economic trends. That's been something of a negative the last 2 years. I think it's going to be a big positive going forward. One reason, just the expectations are low. It builds in lower expectations. So even when interest rates have come down so far and people have started worrying about maybe they're rising, we're actually going to, I think, do pretty well even if rates rise, mainly because, again, these companies have been treated economically sensitive. Now, how are they doing on the earnings front? You know, we're starting to see third quarter earnings come in generally solidly for most of the companies. Again, we're looking for dividend coverage. We're looking for what's going on with their debt situation, whether they're entering any new profitable projects, how their regulatory situation is shaping up. And generally, we're looking at some pretty solid situations here. Industrial sales picking up where they left off in the second quarter, in other words, continuing to rise and recover in most climates. For the communications companies, certainly upselling and broadband and wireless sales, particularly with smartphones being activated along networks, looking very good. We've had earnings from both Verizon and AT&T coming in quite strong on that basis. So a lot of good things continuing to happen. Now, one thing that I think that we are going to want to keep our eye on, we're going to be devoting our December issue of Utility Forecaster to the subject, and that is the election and what happens with the results in November. We're going to have some time to digest those and on not only the federal level but also on the state level where most of this policy takes place, and that will be again included in the December issue. In the November issue, I've chosen to highlight a group of companies from the water industry, and this is an area where I think there's tremendous growth. There's a tremendous array of different types of opportunities, some very, very conservative and very sure, some more aggressive, but very much potential blockbuster. I think this is an area you can invest in with confidence regardless of what happens with the election. You know, expectations are low, and certainly there's some tremendous economic leverage there too. In other words, companies that have proven their ability to weather the worst of economic trends, but also are being treated amazingly enough as economically sensitive companies. So expectations are low, and potential returns therefore are pretty high. So these are the concerns. Again, we're looking at earnings very carefully. And so far what we're seeing, more good news, and that points to good things ahead in 2010, 2011. You know, as I've mentioned before, with the fourth quarter of the year is traditionally a strong one for utilities. We've seen some pretty good gains in the month of October. You know, some of these have been given back the last couple of days, but this is pretty much what we expect in the fourth quarter from a practical standpoint. Unless you're trading that with a couple of the ETFs that we've talked about in Utility Forecaster, unless you're doing that, the only thing that's really important here is if you're buying, what sort of buy prices you're getting, whether you pay below the buy targets. And I would just urge everybody to be very, very patient, buy below the buy targets. don't chase things above those buy targets because basically you're just going to wind up paying too much. Sometimes buy targets are raised when companies begin to do a little bit better. One company that I think is actually starting to justify a higher price would be Atlantic Power. It's one that we've done very, very well with, but it's catapulted on past our buy target of 13 for some time. But over the last few days, they've announced a couple of major deals. They kind of scared people with an equity issue, and now they've shown us that they're putting this money to work pretty much immediately to build and buy cash-generating assets. So classic Atlantic Power deals, classic cash flow building, classic backing for distributions and future distribution growth, and again, potentially a reason to raise a buy target. So stay tuned on that one. But again, that's the kind of thing we're looking for before we raise buy targets. The first quarter is usually a period of seasonal weakness for most of the utilities, so we may get a better opportunity to buy in. But again, we're focusing on the businesses. That's still where you want to go. If we buy businesses that are strengthening, we hold them. I think there's a lot of upside to come. So that's all I have to say today, and thanks for tuning in. I'll look forward to chatting with you next time.